Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So today we are going to cover a very important topic that is not going to be important only for RBI Grade B but also for the NABARD Grade A examination for your 2025 as well as for 2026 RBI and NABARD Grade A examination. Okay, so today we are going to do the NSFI 2025-2030. So National Strategy for Financial Inclusion 2025-2030. This is important for your RBI Grade B examination as well as this is important for your NABARD Grade A examination. Okay, so today we will discuss this National Strategy for Financial Inclusion in detail. We are going to discuss the important points from this National Strategy for Financial Inclusion. Give me a thumbs up if I am clearly audible and visible and everything is clear and the screen is visible, I hope. Good morning everyone, good morning. So today's session is going to be important from your RBI perspective as well as for your NABARD examination. So if you are preparing for 2025, do not miss this topic, that is National Strategy for Financial Inclusion, because a descriptive question can come from this article directly or from this report directly. Okay, so this report has been released by the Reserve Bank of India and we are going to discuss this report in detail in today's session. So let's get started, but before that, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so let's get started with today's topic. Okay, so National Strategy for Financial Inclusion 2025-2030. So first of all, see, what is financial inclusion? Financial inclusion means that the individuals, businesses, they have access to and they are able to use the affordable financial products and financial services. So financial products, the financial services, they are the banking services, the banking products, the saving products, the credit products, as well as the insurance products, the insurance services, the pension products, the investment products and such. So you can understand that these are the financial products, these are the financial services. So more and more people should be included in the financial system of our country. More and more people should have access to the financial products, should have access to the financial services. Why is it required? Because the people should have the bank accounts so that they have the means to do the savings, they have the means to take the credit from the bank, as well as the bank should have the insurance policies so that their risk is being managed and their health, like they should have the health insurance policy, they should have the life insurance policy so that their family is secure, so that their health cost is not much. Okay, as well as the people should have the pension facilities so that the people are able to retire well and they have the flow of cash in even during their retirement period. The people should have the investment products so that the people are investing and they are secured after the retirement also, or they are secured for the future. So you can understand that these financial products, these financial services, they are very much integrated into the well-being of the humans, into the well-being of the society. Okay, if the people have the insurance products, their risk is being managed, their risk is being mitigated, as well as they have the resource so that they can get the health checkups, they can get the health facilities, or they can get the access to the good health infrastructure in case of any unforeseen contingency that happens. Okay, so these financial products, these financial services are very important, and financial inclusion means that more and more people, more and more individuals, more and more businesses should have access to these affordable financial products, affordable financial services. Not only the people should have the access, but the people should also use these affordable financial products and services, okay, that meet their needs, which are delivered in a responsible and sustainable way. So this is the idea of financial inclusion. More and more people should get included, more and more businesses should get included, should have the access, should use these financial products and financial services that should be affordable in nature, and they should be provided in a responsible and sustainable way. So I hope financial inclusion is clear. Now moving ahead, NSFI 2019-2024. So the National Strategy for Financial Inclusion 2019-2024, this was released in January 2020. Okay, and the National Strategy for Financial Inclusion 2019-2024, this shows the pathway to accelerate the financial inclusion in the country. Okay, so the NSFI 2019-2024, this was formed, this strategy was formed and it was released in January 2020. It shows a pathway so that the financial inclusion can get accelerated in the country, can get boosted in the country, and the conversions can happen of the different initiatives that are being taken by the Reserve Bank of India, by SEBI, by IRDI, by PFRDA. You can understand that the Reserve Bank of India is the monetary authority. that is handling the banking, infrastructure in the country, or the RBI is at the apex of the monetary system, of the banking system. Okay, then there is SEBI, that looks after the capital market, where the people invest basically. The IRDI, Insurance Regulatory and Development Authority of India, the IRDI, it looks after the insurance sector. The PFRDA, it looks after the pension sector. So if the financial inclusion has to be accelerated, has to be boosted, so these regulators, they are taking various steps to boost the insurance sector, or to boost the pension sector, or to boost the investment sector, or to boost the banking sector. The different regulators are taking different initiatives. The government of India is also taking different initiatives. So through this national strategy for financial inclusion, the convergence was done so that the different initiatives taken by the different regulators can be converged and can be boosted further. So NSFI 2019-2024, released in January 2020, it shows a pathway to accelerate the financial inclusion and converge the efforts of the different regulators and government of India, so that further the financial inclusion can be boosted. Okay. So NSFI 2019-2024 had set forth the vision, the key objectives of the financial inclusion policies in India to help expand and sustain the financial inclusion process at the national level through a broad convergence of the actions involving all the stakeholders in the financial sector, let it be RBI, SEBI, PFRD, IRDI, or Government of India. Now, continuing the journey, the NSFI 2025-2030 envisions upscaling the financial inclusion efforts. Okay, so now the NSFI 2025-2030 that has been launched, it is going to upscale the financial inclusion efforts. It is going to further boost the financial inclusion efforts towards a seamless and effective access to a bouquet of formal financial services, so that the people can have the access to a bouquet of formal financial services, insurance products, investment products, pension products, the banking services and banking products. Okay, coupled with financial literacy, we do not only want to provide the people the access to the financial products and financial services, we also need to have the financial literacy amongst the people, so that they become aware. Not only aware, there is also the financial discipline that the people have, so that they are saving the money for the future contingency, so that they have insurance products for their risk mitigation. Consumer awareness and customer protection is also important, okay, is also focused on. Now this NSFI 2025-2030, it has been released by the Reserve Bank of India, and the Financial Inclusion and Development Department has worked upon to converge the policies, to converge the actions, and to take the information and to take the inputs from the different regulators. So it is the Financial Inclusion and Development Department that has talked to different regulators and that has prepared and released this NSFI 2025-2030, okay. Now, the National Strategy for Financial Inclusion 2025-2030, it is a very, very important document. I cannot emphasize more than this, that it is a very important document for your NABARD 2025, as this NSFI document, it is released in December. So it is very near to your examination that this report has been released. And financial inclusion, this is a hot topic. This is an important topic from your examination point of view. From RBI Grade B point of view also, this is important. Now in this NSFI 2025-2030, there are 5 chapters. There are 5 chapters that you can see here that we are going to discuss one by one. The important points we are going to discuss one by one. Chalo. So let's get started. So NSFI, so we are going to start with the first chapter first, NSFI 2019-2024, a retrospect. So when we are going to focus on the future, we have to see that what we have done in the past, so that we can build ourselves better for the future, right? Similarly, for the NSFI 2025-2030, we first have to see a retrospect has to be done for the NSFI 2019-2024. What were the objectives, what has been achieved, what are the targets that have been achieved, all of this we are going to discuss. So starting with the chapter 1, National Strategy for Financial Inclusion 2019-2024, a retrospect. The strategy was created after taking inputs, suggestions from the Government of India, various financial sector regulators such as SEBI, IRDI, PFRDA. It also included consultations with specialized institutions and market participants such as the NABARD, NPCI, commercial banks. So this document that was prepared, that is NSFI 2019-2024, it was formally released by Shri M.K. Jain, Deputy Governor of the Reserve Bank of India, at the high-level meeting on financial inclusion for the Northeast region convened at Agartala on January 10, 2020. So this NSFI 2019-2024, it was released on January 10, 2024. So in January 2020. So in January 2020, this it was released. Okay, so in January 2020, this NSFI 2019-2024 was released, and this was released by MKJN. So remember this, that the NSFI 2019-2024, it was released by MKJN, Deputy Governor of the Reserve Bank of India at Agartala on January 10, 2020. Okay. Now, an inclusive financial system. So we want financial inclusion. That means we want to include the people, the businesses in the financial system of our country. So an inclusive financial system promotes stability, integrity, and fair growth for all the sections, for all the communities of the country, which NSFI aimed at through 6 strategic pillars and 18 milestones. So in this NSFI 2019-2024, there are 6 strategic pillars that were focused on, and there were 18 milestones that were focused on. What were the 6 strategic pillars? So universal access to financial services, access to all. So all sections of the country they were focused on, rich, poor, urban, rural, all the sections of the country they were focused on for the financial services. So universal access to the financial services, insurance services, pension services, banking services, investment services and such, providing basic bouquet of financial services. So the people should have the basic bouquet of the financial services, access to livelihood. Now, let's say that you have the access to the investment products, you have the access to the insurance products, you have the access to the pension products, you have the access to the banking services or banking products, but will you be able to use it without any salary? Will you be able to use it without any money, without any income? Will you be able to have the insurance product without any income? Or will you be able to sustain yourself without any income? So remember this, that financial stability or financial inclusion, it is not possible without the livelihood, without the income. If we want to have the financial inclusion, we need to provide the livelihood, the sustenance to the people. Okay, so remember this, that the income stability leads to financial stability, and if income is there, the people have the livelihood, then there will be better financial inclusion that will be possible. So access to livelihood, it is very, very important for the people to get more and more included in the financial system, because when the people have the money, then they invest, then they save, then they buy the insurance products, then they focus on their retirement. Okay, skill development is also important. Financial literacy and education. Through the financial literacy and education, financial discipline can be developed. Okay, so that the people save for the unforeseen contingencies and such. Customer protection and grievance redressal. This is also one very important topic that the different regulators are focusing on. Customer protection and grievance redressal. The Reserve Bank of India has the complaint management system. The RBI also launched the centralized receipt and processing center, CRPC. Then if we talk about IRDI, it has Bima Bharosa portal. Okay, it has also launched a toll-free number and the email ID through which the complaints can be sent to the insurance companies and such. So you can understand that the different regulators, they are focusing on customer protection and grievance redressal. Okay, effective coordination. So there is effective coordination that is required between RBI, SEBI, IRDI, PFRDA, Government of India, as well as the different skill development training institutions and such, so that the livelihood can be improved of the people as well as financial inclusion can be improved of the people. Okay, and remember that this term you will again and again hear, that income is important, livelihood is important, sustenance is important. Why? Because if we want financial inclusion, this is important. Okay, now will you be able to remember these 6 points? Remember, universal access to financial services, providing basic bouquet of the financial services, access to livelihood and skill development, financial literacy and education, customer protection and grievance redressal, effective coordination. These were the 6 strategic pillars of NSFI 2019-2024. Now coming to the achievements that have happened. So by emphasizing the last mile delivery, by emphasizing on access, by emphasizing on providing basic bouquet of financial services. So by emphasizing on last mile delivery, banking access was ensured within 5 km for 99.9% of the 1.21 lakh identified villages or hamlets. Hamlets are the group of 500 households, and multiple measures were taken to strengthen. Now, do you think that the bank is provided, or the banking infrastructure is present in every village, in every hamlet? Can we say so? Yes or no? Can we say so that the banks or the banking infrastructure, is it provided, is it available at every village, the banking infrastructure. So the banks, they cannot be physically present in every village because it is a huge cost for the banking infrastructure. So that's why the banks themselves cannot get established, the bank branches themselves cannot get established in the villages. That's why there are business correspondents that are the arms of the banks, we can say. They are the extended arms of the banks. Okay, business correspondents, like the fixed business correspondents, they are present in the villages in the form of, like, let's say a village person has a shop. So through that shop, the village person is providing the basic banking services, the basic services to the villagers and such. So this is the idea. The business correspondents, they are the extended arm of the banks. It can be a kirana store, it can be any digital services providing shop, any kind of shop it can be, through which the shop is providing the basic financial services to the villagers or to the people. Okay, so multiple measures were taken to strengthen the business correspondents, the extended arm of the banks, because banking infrastructure might not be able to reach the bank branches might not be able to reach the villages, but through the kirana stores, through the digital shops and such, through these shops there can be the basic facilities that can be provided. Okay, for the last mile access. So this is the idea that last mile delivery was emphasized on. Banking access was ensured within 5 km for 99.9% of 1.21 lakh identified villages and hamlets, and the business correspondent network has been made more strong. Okay, over 5 years now, regulators, they have been working on encouraging safe and responsible financial innovation, because financial innovation is important so that the financial products, financial services can be made accessible to a large portion of the population. Okay, so financial innovation is very important in our country. The UPI was a financial innovation, the IMPS, RTGS, NEFT, all of these were the financial innovations, as well as the Bima Sugam and the different initiatives taken by IRDI also. They are the financial innovations that are happening. Now, how the financial innovations are being boosted? By providing the testing environment, by providing the control testing environment to the new ideas, to the new financial products through the regulatory sandbox. So Reserve Bank of India has the regulatory sandbox. Similarly, the SEBI, IRDI also have their own regulatory sandbox, and through these regulatory sandbox, the controlled testing environment is providing for the financial products, financial services to be tested, and bringing practical digital solutions to the last mile. On the demand side is the consumers. We are consuming the financial services, financial products. On the demand side, the financial inclusion improved as every block in the country was covered through centers for financial literacy, and National Center for Financial Education created easy customized financial literacy modules for different groups so that the financial education can be spread to the different groups in the local languages. So National Center for Financial Education created easy customized financial literacy modules for different groups in the period of 2019 to 2024. And in the period of 2019 to 2024, under the NSFI, there was the different innovations that have happened under the regulatory sandbox of the different regulators. Okay, banking outlets in villages increased from 5.97 lakh to 15.98 lakh, and basic savings bank deposit accounts rose from 57.42 crore to 70.959 crore over the same period. So basically, banking outlets in the villages have increased, as well as the basic savings deposit account have also increased. Next is, during the strategy period of 2019 to 2024, the Reserve Bank introduced two indices, the Digital Payment Index as well as the Financial Inclusion Index in 2021. So Digital Payment Index, it shows the penetration of the digital system, the digital payments, okay, the deepening and the penetration of the digital payments, as well as the Financial Inclusion Index shows the financial inclusion of more and more people. So the Digital Payment Index has increased significantly from 2019 to 2024. You can understand from 150 to nearly 445. Similarly, the Financial Inclusion Index also improved from 49.9 to 64.2 with excess. So under the Financial Inclusion Index, there are three subparameters. There are three broad subparameters, that is access, usage, and quality. Now, anyone who can tell me that which of these Financial Inclusion Index parameters has the highest weightage in the Financial Inclusion Index? Anyone? Which of these has the highest weightage in the Financial Inclusion Index? It is the usage that has the highest weightage. Okay, so basically the excess, usage as well as quality indexes, they have improved from 2019 to 2024. Now if we see that in 2025 the financial inclusion index 2025, its value has further improved from 64.2 to 67. Okay, so this is the idea that there is further increase that is happening in the value of the financial inclusion. Chalo. Now coming to the state of financial, now coming to the chapter 2. Any confusion in the chapter 1? In the chapter 1 we have discussed about the national strategy for financial inclusion 2019-2024. We have discussed about the 6 strategic pillars. We have discussed about the achievements that have been done. Okay, some data points have been discussed. If you are not able to remember all the data points, then at least remember 1 or 2 data point that you can use in your answer writing. Okay, chalo. Now coming to the chapter 2. Shall we start with the chapter 2? State of financial inclusion in India. So basically the banking. Here you can see the banking infrastructure. The bank branches, they have improved from March 19 to March 2024. But the increase in bank infrastructure is very, like the increase in bank branches is very slow. Like I have told you that it takes a huge cost to establish the bank branches. So that's why the increase in bank branches is not much. Okay, the bank is using different methods to promote the banking services or to make the banking services accessible. Basically through the business correspondence, the bank is helping the village areas, the bank is helping the far off areas to achieve the services, okay, to achieve the banking services. So basically the bank branches, the increase in bank branches is not much. The ATMs, the number of ATMs have improved. NBFC branches, they have improved. The business correspondents, here you can see the business correspondents, they are increasing very rapidly. Okay, so business correspondents, the fixed business correspondents through the shops, through the kirana shops, through the digital services providing shops and such, that are present in the villages. So different kind of shops present in the villages, they can become the business correspondents as the bank provides them with certain fees. The bank provides the business correspondents with certain fees for every transaction that they are doing, okay, and every transaction that they are helping in. And the business correspondents, they have the resources through the bank, they have the resources to provide the basic banking services. Okay, so business correspondents have improved rapidly in the recent time, so that the bank branches which cannot reach to the village areas, at least business correspondents can reach to the far off areas. So banking infrastructure per lakh population improved sharply. Fixed point business correspondents, that is the business correspondents that are providing the basic banking services, that are providing the basic services, basic financial services that are through a fixed point, that is through a shop or through some store and such, rose from 30.1 per lakh population to 85.6 per lakh population. While bank branches stayed around 12.5 per lakh population, ATMs remained stable at 17 to 18 per lakh population. So in the bank branches and ATMs, there is not much improvement that has happened, but the business correspondents, they are increasing rapidly. Okay, and the bank is trying to reach to the village areas through the business correspondents. All major parameters, here you can see the financial inclusion index has also improved from 49.9 in 2019 to 64.2 in 2024. All major parameters such as the per capita, that is per head bank accounts, cards, mutual fund assets under management, the mutual fund assets under management, bank deposits, credit, etc. have grown steadily over the past 5 years with no negative trends. Okay, with showing a gradual expansion, slowly the expansion is happening of the financial system. So this is the idea. Now coming to the supply side. So we are talking about the state of the financial inclusion in India. We have talked that okay, slowly and slowly there is improvement that is happening, but there is also some supply side impediments, some supply side problems to the financial inclusion and demand side problems to the financial inclusion. So if a question comes on the financial inclusion and about the impediments or about the problems in front of the financial inclusion, you can use these points. Okay, I will briefly tell you that what these points are. So most business outlets, most business correspondent outlets, they mainly handle the remittances and cash services. like the banking services. They do not handle the products, or they usually do not handle the products like insurance, micro pension, loans, overdrafts, the Kisan credit card. These were available only at select outlets, leading to uneven service access in areas fully dependent on business correspondence. So there are several areas that are fully dependent on business correspondence, and these areas, you can understand that there is in these areas which are fully dependent on the business correspondence, and some of the business correspondents, they are not providing the insurance, micro pension, or they are not providing the services of overdraft or Kisan credit card and such. So these areas that are fully dependent on the business correspondence, they are not able to access such kind of products. So most business correspondence outlets mainly handle the remittances and cash services or basic banking services only, and other products are not being able to be accessed by the people. The absence of a predetermined, see, there is no prescribed minimum standard that is set for the business correspondent services. So there is no standardization. Some business correspondents are providing some other services, some business correspondents are providing some other services. There is different quality of services that they are providing. There is difference in the quality of products that they are providing. So there is absence of a prescribed minimum standard set of business correspondent services. This has led to poor standardization. In some areas, business correspondents are working very well. They are providing various types of financial products and financial services. In other areas, the business correspondents are working poorly. They are not able to help the people of the area. Okay, so it is difficult to manage the customer expectations and monitor the service delivery. The survey showed, so in the supply side, the survey showed that most business correspondents, they did not display the service fees beforehand, and concerns existed about unauthorized or unaccounted upfront charges. So many of the business correspondents might be taking the upfront or unaccounted charges in addition to the transaction charges taken by the bank. So business correspondents, they are taking the wrongful charges from the customers also. Low representation of women business correspondent agents reduced inclusivity and outreach to the women customers, because the women customers, especially in the village areas, you can understand that the women, if they want to have the banking services, first of all, they want to connect with the women only to get understanding of the banking services, of getting understanding of the insurance services and such. So if there is low representation of the women business correspondents, if there are lesser women business correspondents, that means there is lesser outreach and there is lesser inclusivity for the women in terms of providing the services and getting access to the services. Okay, so if there is lower number of business correspondents that are women, so that means there are lower number of women in the village areas that are able to access the services, the banking services or the other services, because women in the village areas, they connect more with the other women of the village areas. Okay, demand side impediments to financial inclusion. So now we have talked about the supply side. Coming to the demand side in the household segment, so this is very important for the NABARD examination. You can use this data point in different answers. Okay, in the household segment, personal loans, education loans, home loans, they were the top 3 credit facilities in demand. So usually if the loan is being taken by the individuals or by the households, it is for the personal loan, education loan or home loan. Yet about 50% of aspirants had unmet credit needs. Lack of awareness about the procedure, unavailability of the nearby bank branch, lack of collateral, they were cited as top 3 problems in the order of getting the credit. Okay, so you can understand that around 16% of the respondents used informal sources of credit, mostly for small ticket loans. So mostly for the small tickets loans, rather than going to the bank, many of the respondents or many of the customers, they are taking the loan from the informal sources. Still, there are informal sources that are being used, like the money lenders that are being used. So with its share being higher in rural areas especially, the informal sources are still present, still being used. In general, people may have relied upon informal sources of credit due to ease, timeliness and convenient access. So the main problem that is coming in the bank branches is that there is unavailability of the nearby bank branches in the village area, in the rural area, lack of collateral that the people have, as well as the awareness of the procedure is not complete amongst the people. The people are very afraid to go to the big bank branches, or the people are afraid to go to the bank branches because they are not much aware that what is the procedure that is being followed. Okay, information asymmetry, the information is not symmetrical, it is not available to all. So lack of awareness about availability, cost. usually if you see a big building, you are very like you get tense that what if they charge more, what if they take charges for the different services that they are providing, and they take more and more charges, what will I do? Like I will be ashamed if I am not able to provide the money. Okay, so when you see a big building, you're not very comfortable in going in. Similarly, you can understand that the village people, if they, or the rural people, if they want to go to a big bank branch to take the loan, or if they want to go to the bank branch to take the loan, they are usually susceptible and they are usually afraid to go in the bank branches, as well as they are not much aware that what will be the cost. They are not aware that the interest rate will be less or more. So there is lack of awareness about availability, cost, use of financial services and such. There is also the literacy barriers and language barriers. Among those without insurance or pension products, awareness of their need was low. You can understand that the people that do not have the insurance or pension products, they do not have the awareness of these products also, and why these products are required for the people. Awareness about schemes like the Pradhan Mantri Fasal Bima Yojana, Atal Pension Yojana. So awareness about the schemes ranged between 30 to 35% only. That means the people are not aware about these schemes. Rather than the usage is a secondary problem, the people are not aware about this scheme. Near universal ownership of bank account but irregular income, limited active usage. So as I have told you that the income stability leads to financial stability. If the people do not have the income, even after owing the bank accounts, they will not be able to use the banking services. Okay. Now, coming to the chapter 3, that is vision of NSFI, an inclusive financial system towards well-being of people. So we have completed the second chapter about the state of financial inclusion in India. Now coming to the chapter 3. Any confusion? No, this PPT will be provided to you, so you do not have to make any notes because the PPT will be provided to you in the PDF form. Okay? Any confusion? Chalo. Now this is again very important. Chapter 3, the vision of NSFI 2025-2030. Definition of financial inclusion. So the Committee on Financial Inclusion, Chairman Dr. C. Rangarajan, RBI 2008. So basically the Committee on Financial Inclusion that was under the chairmanship of Dr. C. Rangarajan in 2008 defined financial inclusion as the process of ensuring access to financial services. The people should be given access to financial services, timely and adequate credit for the vulnerable groups such as weaker sections, low income groups at an affordable cost. So here you can understand that the focus was given to credit. The focus was given to credit. In 2008, the financial inclusion was considered from the perspective that okay, the people should get the affordable credit or the people should get the adequate credit. Now the Committee on Medium Term Path to Financial Inclusion that was chaired by Shri Deepak Mohanty, RBI 2015. So in 2015, the financial inclusion definition was broadened, and the definition, the Committee on Medium Term Path to Financial Inclusion, it viewed financial inclusion as convenient access to a basket of basic formal financial products and financial services. So people should get the access to a bouquet, a basket of financial products and financial services such as savings, remittance, credit, government supported insurance and pension products to the small and marginal farmers, low income households at reasonable cost with adequate protection, progressively supplemented by social cash transfers, and besides increasing the access of small and marginal enterprises to formal finance and greater reliance on technology to cut cost and improve service delivery. So basically in 2015 the focus was given to the bouquet, to the basket of basic formal financial products and services that the small and marginal farmers, the low income households, they should get access to the different products and services, the insurance and pension products, the savings, the banking services and such. As well as there was focus that was given to the small and marginal enterprises that they should get the formal finance. And the technology should be used to cut the cost of providing the finance and improve the service delivery. Now, the NSFI 2025-2030 provides this objective of financial inclusion. This is the objective of financial inclusion as per NSFI 2025-2030. So the objective of financial inclusion as per 2025-2030 NSFI, the objective of financial inclusion is ensuring availability of equitable, responsible, suitable and affordable. So all these terms have been explained in the NSFI document, okay, that I will explain you. But basically the objective of financial inclusion is ensuring availability of equitable, responsible, suitable, affordable access to a bouquet of formal financial services, savings, payments, remittances, credit, investment. This was not a term that was used in 2015, that is used now. Insurance, pension across socio-economic and geographical strata. There is no mention of only the small and marginal farmers, only the low income households. It is basically, the objective is basically saying that these kind of financial products have to be provided across the socio-economic and geographical strata, let it be whatever section of the society, coupled with effective financial literacy. So now we also have to focus on financial literacy, because financial literacy promotes financial discipline. If the people are financially literate, the people know that if they want to have a stable life in the future after the retirement, they need to have pension facilities, they need to have insurance for their risk mitigation. So effective financial literacy leads to financial discipline. Robust customer awareness and customer protection measures. So you can understand that in 2025-2030 there is further improvement in the idea of the financial inclusion. It is not only about providing savings, remittances, credit facilities, insurance and pension facilities. It is also about effective financial literacy, customer awareness, customer protection. Okay. Now what is equitable? Equitable means that across the geographical strata, in a reasonable homogeneous manner, in the identical manner, this access has to be provided for the financial services, financial products. Okay, so the access infrastructure should be available across the geographical strata in a reasonably homogeneous manner, that is in the identical manner, without any discrimination. There should be financial products, financial services that should be provided. So that is the meaning of equitable. Responsible means that the banks, the investment products that has to be provided, the financial products that has to be provided, financial services that has to be provided, they should be provided in the responsible manner, so that the customers are not manipulated, so that it does not limit the customer's free choice, it does not limit the customer's interest or suitability needs, and it do not leave customers worse off. It should not be like that the people are taking the financial products, financial services, and they are getting worse off. That is the worst kind of situation, because we want the financial inclusion for the betterment, for the well-being of people. So the people or the customers should not get worse off after taking the financial products, financial services in the economic, behavioral and social terms. Suitable. Financial products and services should match the customer's needs, as well as the customized option should be provided that the people can choose from. Affordable. So the financial services, basic financial services like the basic accounts, savings, investment, the basic financial services should be affordable. First of all, they should be provided for free of cost, while other services should be priced affordably. Okay, so this is the idea. So equitable means providing the access to all. Responsible means it should not worse off the customers, do not manipulate the customers. Responsible, in the responsible manner, provide the services and products. Suitable means that it should match the needs of the customers as well as the financial situation and understanding of the customers. It's not like that the farmers, let's say the small and marginal farmers, they have different needs. So the needs has to be catered to. The small and marginal enterprises, they have different needs, so the needs have to be catered to. So in the suitable manner, the products and the services has to be provided. Affordable. So the basic accounts, the basic savings, basic small remittances, investment accounts, small digital payments, they should be provided free of cost. Other services, they should be priced affordably. Okay, so this is the idea. So the objective of NSFI 2025-2030 is the objective of financial inclusion is ensuring availability of equitable, responsible, suitable, affordable access to a bouquet of formal financial services, okay, across the socio-economic geographical strata, coupled with effective financial literacy, robust customer awareness and customer protection measures. Now, if in the objective, if this is being met, so financial inclusion as above, the financial inclusion, the objective that we have discussed as above, with the involvement of all stakeholders, financial inclusion with the involvement of all stakeholders improves financial safety, financial security, financial resilience and financial discipline. So that means if the objective is being met, if the financial inclusion is being provided in the equitable, responsible, suitable and affordable manner, if in these four means the financial inclusion is being promoted, is being provided, then you can understand that it will lead to financial safety, financial security, financial resilience, financial discipline. Now, so financial inclusion as above with the involvement of all stakeholders, with the involvement of RBI, SEBI, PFRDA, IRDI, Government of India, improves financial safety, financial security, financial resilience and financial discipline. So financial inclusion improves these. Okay. Now, we will discuss the quadrangle, that is these four. of financial safety, financial security, resilience and discipline, and their anchors. So to lead to financial safety, what is the anchor? To lead to financial security, what is the anchor that is focused on? Okay, so financial safety, first of all, till now any confusion? Till now any confusion, anyone? This is very important, okay? So financial safety basically means smoothly managing the day-to-day transactions. Financial safety means smoothly managing the day-to-day transactions, so that in the safe manner the transactions are being conducted. Suitable access has to be provided so that day-to-day transactions can happen. For that, suitable access has to be provided. So fair and suitable, affordable financial products and financial services so that the transactions can be possible on the day-to-day basis. Quick, simple, efficient grievance redressal mechanism so that there is no problem that is coming, or if the problem is coming, the people have the access to grievance redressal mechanism. Regular and sustained, as I have told you that income safety leads to financial safety also. Income safety leads to financial safety. Income safety leads to financial safety, or income security leads to financial security. So income safety, financial safety will be possible if the people have the livelihood, regular and sustained income stream through wage or non-wage livelihood. So basically, if the people have regular and sustained income, then only they will be able to do the day-to-day transactions. Can you do day-to-day transactions without money? No. For the transactions to happen, for your basic transactions, you need the income. So for the smooth, for the day-to-day transactions, regular and sustained income should be there, and this transactions will help, or these income will help meeting basic sustenance needs of the people. So suitable access and livelihood support, as well as financial security also. For the financial security, the focus is ability to meet any contingency. So if you have the regular flow of income, and through that income you are saving the money, regular savings, liquid, for at least, like you are doing the regular savings and you have the savings for at least 2 months average household expense, and long term, in the long term you are doing the saving and you are able to acquire some financial asset or physical asset. So you have the ability to meet any contingency, any unforeseen contingency, any unforeseen problem can be handled if you have the savings, short-term savings and long-term savings. Okay, so continued subscription of any pension scheme. So after the retirement, you need to maintain your standard of living. For that, you need to have the pension scheme so that after the retirement you have the regular flow of cash. Okay, so there is continuous subscription of any pension scheme, effective planned customer protection measures and deposit insurance. So this is financial safety and financial security. The anchors are suitable access, livelihood support and customer protection. Okay, and the meaning I have told you, financial safety means smoothly managing day-to-day transactions. Financial security means ability to meet any contingency. Financial resilience means ability to recover from financial setbacks. That can be done through insurance coverage because it mitigates the risk, it reduces the risk. So unexpired insurance coverage within acceptable bearable cost has to be provided, so that within the bearable cost the insurance products has to be provided, life coverage, health coverage, asset coverage and such. Credit facilities should be provided in the fair manner, fair emergency credit to reasonably cope with the financial setback or sudden difficult situation. Okay, that's why there are personal loans. So that leads to financial resilience, ability to recover from financial setbacks. The anchors are insurance coverage and credit facilities. Financial discipline, attitude and behavior towards a steady financial future. So as I've told you that financial literacy leads to financial discipline also, and financial discipline means the attitude and behavior towards a steady financial future. So financial education, financial literacy, financial education is very important for the financial discipline, and experiential learning is very important. Okay, so financial awareness and confidence, so that the people can have the financial discipline if they are aware that okay, they have to save for the future, the insurance products are there, pension products are there for their regular cash flow after the retirement. So the financial awareness and financial confidence, it improves. Okay, now next is the diversified investment, sustainable indebtedness. So realistic goal setting and planning. So there should be realistic goal setting and planning so that the financial discipline is maintained and there is a steady financial future that is achieved. Sustainable indebtedness basically means that monthly repayment that has to happen, the monthly repayment amount towards the outstanding loan should not exceed half of the monthly income of the household. Let's say you are earning 10,000. So your monthly repayment should not exceed more than 5,000. Okay, so this is the idea. So now coming to the diversified investment, so that you are able to handle any kind of problems. Okay, so that through the investments that you have done. Chalo. Now coming to the vision of the NSFI. So now coming to the vision of NSFI 2025-2030. So following the above discussions, the vision of NSFI is as under. So this is the vision of the NSFI. To strengthen the financial inclusion ecosystem with the synergized efforts of stakeholders towards well-being of people by ensuring delivery of equitable, responsible and suitable, affordable financial services. So basically, to strengthen the financial inclusion ecosystem with a synergized effort of stakeholders. So financial inclusion ecosystem can only improve when the efforts are being taken by the stakeholders towards well-being of people by ensuring that the people have the equitable, responsible, suitable and affordable financial services that is duly supported by livelihood enablers. As I have told you that if the people have the financial services, financial products that is provided in the equitable, responsible, suitable, affordable manner, so these financial services that is provided, they will be used only when the people have the income, when the people have the livelihood. Okay, so basically for the people to have the equitable, responsible, suitable, affordable financial services, okay, for the people to use these services, there is the livelihood that the people should have. Okay, so this is the idea. So to strengthen the financial inclusion and to ensure that the people have the equitable, responsible, suitable, affordable financial services, not only the excess but the people are using these services, there should be livelihood enablers that should be provided. That means the people should be provided the opportunities. Effective financial literacy, digital public infrastructure and robust customer protection. So this is the vision of the NSFI. So financial inclusion ecosystem, banks, financial institutions, financial sector regulators, the SROs, the self-regulatory organizations. So there are different entities that are working towards, the financial inclusion. Okay, there are different entities that are working towards the financial inclusion ecosystem. The financial inclusion ecosystem is a coordinated network of stakeholders working together to improve people's well-being through financial safety, security, resilience, and discipline. So there is nothing much to understand here. So basically, the vision of the NSFI has been discussed. The vision of the NSFI is to strengthen the financial inclusion ecosystem. The financial inclusion ecosystem is a coordinated network of the stakeholders, the regulators, the RBI, SEBI, IRDI, PFRDA, Government of India. They are working together to improve the people's well-being through financial safety, security, resilience and discipline. Okay, so people's well-being is improving through financial safety, security, resilience and discipline. How the people are able to access the financial safety, security, resilience and discipline? When the people have the financial services provided in the equitable, responsible, suitable and affordable manner. Okay, so to strengthen the financial inclusion ecosystem with the efforts from all the stakeholders towards well-being of the people, that is through these, by ensuring delivery of financial services in this manner. Okay, that is duly supported by livelihood enablers, effective financial literacy, digital public infrastructure and robust customer protection. Okay, let me just see once that. Okay, everything is fine. I thought that there is some problem, but okay, it is. I hope this is clear. Is this clear? Any confusion, anyone? So we have discussed the vision. Now moving forward. Okay. So see, the role of financial inclusion policies in specific sustainable development goals and targets. So basically, there are 17 sustainable development goals that have to be achieved by 2030. So there is Agenda 2030. Okay, so there are the role of financial inclusion policies. There is the financial inclusion policy will help in the poverty reduction, in the ending of hunger, health and well-being, gender equality, decent work and economic growth, industry innovation, infrastructure, reducing inequality, strengthening the means of implementation. Now you can read this because there is not much to understand here. This is just basic theory. You can understand this is just basic statements that have been provided. If people have good livelihood opportunities, if the people have the skills, if the livelihood enablers are provided to the people, then the poverty will reduce. Ending hunger. So inclusive financial system incentivizes the credit-led investments and the people to if the people are more financially included, that means they have financial products, financial services, they have the credit facilities and such to sustain themselves. Okay, health and well-being. So insurance helps in that. Gender equality, gender sensitive financial inclusion policies will decrease the gender inequality by empowering women and improve their access to the financial products, financial services, and improve their overall socio-economic status. So this is the basic idea. Okay, now moving forward to the chapter 4, and we just have to discuss a few slides and we are done with it then. Now, chapter 4 is about NSFI strategic objectives and action points. So, NSFI 2025-30 timeline is aligned with the 2030 agenda for the sustainable development. As I've told you that there are 17 sustainable development goals that have to be achieved by 2030. So, this is agenda 2030. Now, this timeline of the NSFI that will end in 2030. Similarly, sustainable development goals have to be achieved by 2030. So, the NSFI timeline is aligned with the 2030 agenda that was adopted by 193 UN member states in September 2015 and effective from January 1, 2016. The agenda's principles of leave no one behind. So, the Agenda 2030, the principle or agenda's main core idea is to not leave anyone behind, and holistic development closely match NSFI's outcome focused financial inclusion goals. So basically Agenda 2030 of sustainable development, that is the 17 sustainable development goals. They focus on no poverty or ending hunger. They focus on gender equality. They focus on decent work and such. So these same goals or these same kind of objectives, they are undertaken in the NSFI also. Okay, now the 5 strategic and synergized objectives collectively referred, this is important. Okay, there are 5 strategic and synergized objectives under the NSFI 2025-2030. They are collectively, now these 5 strategic objectives, they collectively are referred to as Panchjyoti. So we have discussed one major objective of the NSFI 2025-2030. We have discussed about the financial inclusion components. Okay, we have discussed that financial inclusion is what? This is financial inclusion. Access to a bouquet of formal financial services that is equitable, responsible, suitable and affordable. So the bouquet of formal financial services should be provided. So there should be access that should be provided of the financial services that is equitable, responsible, suitable and affordable. So this is financial inclusion. That leads to financial safety, financial security, financial resilience and financial discipline. Okay. So after discussing this, we have discussed about the vision of the NSFI that talks about that the well-being of the people should be ensured by delivering the financial services in equitable, responsible, suitable, affordable manner, supported by livelihood enablers, financial literacy and such. Okay. After this, we have discussed about, now we are going to discuss about the 5 strategic objectives collectively referred as Panchjyoti, comprising 47 specific action points which are aimed to help elevate the state of financial inclusion in the country. So the 5 objectives are improving the availability and use of equitable, responsible, suitable, affordable bouquet of financial services to achieve financial safety, financial security for households and micro enterprises. Adopting gender sensitive approach for women-led financial inclusion. This is very important to improve the gender equality, and to decrease the gender inequality we need to adopt gender sensitive approach so that the women led financial inclusion can be promoted, so that the financial inclusion in such that the women are included in the financial inclusion. Differentiated strategies are required for improving the financial resilience of the households so that they can handle the unforeseen contingencies, especially for the underserved and vulnerable sections. Synergizing livelihood, skill development, support ecosystem and its linkages with the financial inclusion. Financial inclusion is not possible again without the income of the people. For financial inclusion, for the people to be financially included, to be included in the financial ecosystem, the people should have the income, should have the money for the transactions, for the investment, for the insurance and such. Okay, leveraging financial education as a tool for promoting financial discipline. Financial education is not only for financial awareness, it is a tool for promoting financial discipline. Strengthening the quality and reliability of customer protection and grievance redressal measures. This is another objective. Okay, so to achieve these objectives, there are 47 specific action points that has to be undertaken, and most of the action points is in the category of improving the usage, because access is being provided. Like the people have the access, but many of the people, even after having the access to the banking facilities, insurance products, pension products, even after having the access, the people are not using it because of different reasons, because of financial awareness being lacking, or because of the fear of the cost of the products and such. So even after the access that is provided for the financial products, the people are not using it. So there are action points. Most of the action points, they focus on improving the usage. So 19 action points, they focus on improving the usage. 19 action points focus on improving the quality of the financial products, financial services. Okay, then the 6 action points focus on providing more and more access, and the 3 action points focus on monitoring and measurement. So basically data. Okay, so there are 47 action points that are being undertaken for the 5 strategic objectives: access, usage, quality, and monitoring and measurement. Usage and quality, they are more focused on. Now coming to the chapter 5, that is the last chapter, monitoring and measurement mechanism. So basically financial inclusion indicators are access, usage, and quality. So how can we see the financial inclusion? We can see the financial inclusion, like in the financial inclusion index also, the parameters are access, that do the people have access to the financial products and financial services? Is it available to them? Then usage. If the people have the financial products and financial services available, are the people using the financial products and financial services? Quality. What is the quality of the financial products and financial services? The customer awareness is there, the customer protection is there or not? Okay, or the inequalities, are these being reduced or not? So the quality of the product, financial services, in the sense that the customer awareness is being promoted, customer protection is being promoted, inequalities are being reduced. So financial inclusion indicators are access, usage, and quality. Now supply side assessment. If we want to see the supply side of the banking infrastructure, is it improving or not, or the insurance products, insurance companies, are they improving or not? So supply side assessment is done through regulatory and other available data. The regulators and the other available data, through that supply side assessment happens. Demand side assessment of the customers requires surveys, studies to understand on ground quality and enablers. Okay, so supply side measurement is done through data collection that should fully cover all formal financial institutions that is involved in the financial inclusion in the financial products and services. Data should be collected at the district level with gender and age wise breakup to access the regional gender age related differences in access and usage. Customer data that is captured by financial service providers should include the income level of the customers, education, occupation, purpose, to support better analysis and policy design, that which category requires more credit, which category requires which kind of insurance products, pension products, and such. Common and harmonized definition should be developed for terms such as vulnerable consumers and migrants amongst the different financial sector regulators. So different financial sector regulators, they have different understanding of the vulnerable consumers and migrants and such. So these different financial sectors or regulators, they should develop a consistent, common and harmonized definitions. While the current financial inclusion index measures progress at the national level, that at the national level access, usage, quality is improving, but at a disaggregated level there is no parameter. So at a disaggregated level there is the requirement to have the financial inclusion that should be developed, preferably at the state or union territory level, and during the NSFI 2025-2030 a new broader financial inclusion index series that should be developed for the state, union territory level data should be constructed and published. So basically right now we have the financial inclusion index for the country at the national level, but it is said that during this time period of NSFI 2025-2030 a disaggregated financial inclusion index should be developed for the state and union territory level data. Okay, so now coming to the last slide, that is demand side measurement. After this we will discuss the questions. Okay, demand side measurement. So we have discussed about the supply side measurement. Now coming to the demand side measurement, conduct of studies. See, supply side data can be collected through, or the supply side assessment can be done through the regulatory and other available data, because the banks, they are filling in the data, they are providing the data to RBI, the insurance companies are providing the data to IRDI. So through the data collection the supply side assessment can be done, or through the data the supply side assessment can be done. Demand side assessment requires surveys and studies, the survey from the respondents, the survey from the consumers. So demand side measurement, conduct of studies and surveys along with supply side data. Demand side measurement through survey and focus groups is needed to identify the barriers to access. What is the problem that is in front of the consumers, why they are not using the available services, what is the problem that is arising, the quality of financial inclusion and such. So demand side measurement should be done through surveys, focus groups and such. A user focused approach helps reveal gaps between needs and services. So let's say in a village there is the need for credit facility. There is need for the Fasal Bima Yojana. There is the need for insurance facility for the crops. There is the need for pension facility, but the services are not available in that village. So there is the user focused approach that should be undertaken to reveal gaps between needs of the people and the services that is provided in that area. So last mile delivery bottlenecks can be catered to, that why these services are not being provided in this area when the people have the need. So last mile delivery bottlenecks can be recognized, regional gaps can be recognized, and changing preferences can be recognized, that now the people require these kind of products. Okay, now way forward is that financial inclusion works best when it is linked with financial education. Financial education improves financial discipline, customer protection, skills, livelihoods. So financial inclusion without livelihood, without income is a myth. Entrepreneurship, market access through joint efforts, helping improve people's financial safety, security, resilience and discipline. So this is the idea that financial inclusion works best when it is linked with education, financial education, customer protection, skills, livelihoods, entrepreneurship, market access through joint efforts, helping improve people's financial safety, security, resilience and discipline. Remember this very clearly, that financial services, financial products has to be provided in the equitable, responsible, suitable and affordable manner. And these financial services that is being provided, they should be linked with the livelihood enabler. And if this is happening, then it will lead to the well-being of the people. If the financial services are being provided in the equitable, responsible, suitable and affordable manner, linked with the livelihood enabler, it will lead to the well-being of the people, because they have the financial services in this manner. And the well-being of people basically mean that the people have financial safety, financial security, financial resilience and financial discipline. This is what the vision was trying to tell you, that strengthen the financial inclusion ecosystem, the relationship and the conversion of actions of the different financial regulators with synergized efforts of stakeholders towards well-being of people, towards financial safety, security, resilience and discipline, by ensuring. So how the people will have the well-being, financial safety, security, resilience and discipline, when the people have the equitable, responsible, suitable and affordable financial services that is duly supported by livelihood enablers, effective financial literacy, digital public infrastructure and such and such. So I hope this is clear, that to strengthen the financial inclusion ecosystem, the vision is to strengthen the financial inclusion ecosystem so that this can be achieved. Chalo, this is done. Now, this is the first question. So this is your homework question. I hope you will be able to answer this question. So do answer this question. This is the homework question. With reference to the Panjyoti framework under the NSFI 2025-2030, consider the following statements. Which of the statements given above are correct? Are correct. Okay. So you have to tell that. Now, which answer is correct? So whichever answer is correct, like the answer is given within 24 hours in the comment section below, and the answer is correct, I will comment down below of that answer, that okay, this is correct. Okay, and the other students, if they want to check their answer, they can check the answer through that. So you have to answer in the comment section below, and whoever is giving the right answer within 24 hours, I will reply below the comment that this answer is right or not. Okay, so that's why, so that you know that what is the answer. So this is the first question that you have to answer in the comment section below, and I will tell you that the answer is wrong or correct. If you are answering within 24 hours, I will reply to your comment. Okay, now this is the second question. Again, this is very, very important. The objective, the vision, they are the most important things that you have to cram 2 or 3 lines and just cram the basic idea. Okay, that the objective of financial inclusion is to provide what kind of services. Okay, so what is that? Chalo. So this is it. Thank you very much for joining the session. I hope you enjoyed the session. I hope you understand the importance of the NSFI 2025-2030. That is very, very important. And do answer the answer of the questions in the comment section below. All the very best to all of you. I hope you enjoyed the session, and see you again in the next session that will be taken on Thursday next week. So I'm enjoying making these sessions. The NSFI 2015, 2025, 2030 was a big report, but I knew that it is very important for the NABARD, for the RBI. So I've brought this report for you, and I hope you were able to understand the points. I hope you will be able to use these points in your answer writing. And if a question comes on financial inclusion, if a question comes on financial sector, financial safety, financial discipline, you can use the terminology, so you can use the understanding from this report. Okay. So thank you very much. Thank you for joining. See you in the next session, and do give the right answer of the questions. You will get the PDF in the